Hello traders, Gary Wagner for Trending Markets on Monday, February the 8th, 2016. We're looking at the Dow Jones Industrial Average recovering greatly from the lows of the day, but still trading off in triple digits, down 177 plus points at 1627. The interesting thing, take a look at this low, 15,803, so we're 200 points off the low, meaning that at the low of the day, we had the Dow Jones off about 370 points. Tremendous move in the market. When we take a look at this daily chart, you can see that low here, and it's very much like a hammer, but after Friday's devastating market results and into today, whether or not we're going to call this some sort of buying that came in on the close, we certainly didn't exceed the lows that we hit back in the month of January, but nonetheless, a tremendous down day. Now, we had some interesting action in the Standard & Poor's, of course, that also being lower. Let's first take a look at our price point. But it did come well off of the lows, 1852, down about 23 points on the day. And if you take a look at the low, it was 1821. So it's down pretty much double digits from where we're at now. Standard Candlesticks daily chart, much in the same way that what we saw in the Dow is going to really look very similar here on a daily chart, but you can see these lows. These lows are above the lows that we hit at the beginning of the year, and we also had a pretty strong recovery as we went into the close of the market, coming off of these lows and trading up a good 30 points to still close lower on the day, but not nearly as low as the lows of the day. Now, oil, again, under pressure, and one of the things that I find kind of interesting is the fact that what we tend to see in this particular market is that when crude oil is trading lower and trading lower during the day, what we tend to see is once oil closes, there's a disconnect between what we're seeing in the equities markets and what we're seeing in oil, and you get your recoveries. Those tend to come later on in the day. Also, when we look at the dollar itself was down, but not in the ways that we saw it the other day. If you take a look at this weekly chart, look at the activity that we saw last week, and we did come in, make some new lows, and we went to lows that we haven't really seen since about October of last year. So traders, to give you an idea of the kind of recovery we saw in this market, I draw your attention to our current chart that I've pulled up. It is a 60-minute chart. So this is our last hour of trading here and the hour just prior to that. So in the hour just prior to our last hour of trading, we saw the S&Ps trading at roughly 1826, 1827, and then pop up to 1855 on the high to settle at about 1846 before the last hour of trading, in which we saw settlement at 1852. So a tremendous surge in the last couple of hours of trading, whether it's short covering or the belief that this market at this point is a little bit on the oversold side is something to be determined. If it's a belief that we were oversold, then obviously what we will see is some continuity and some continuation buying as we go in. But when we look at our weekly chart, we've got, this is still a devastating week as we're only at Monday, trading dramatically lower, well below not only the 50-day, but the 200-day moving average. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.